Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your business. He is the founder of the direct response marketing firm Market Domination LLC, and he is a 7-time best-selling author who has been interviewed on NBC, CBS, Forbes, Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity and real estate funds, discussing developments and trends shaping the industry. These experts will share with you how they've leveraged the power of equity funding to grow their businesses and increase profits, and how you can too. And now, here's your host, Cliff Locks.
Welcome to the Private Equity Profits Podcast. I'm Cliff Locks, your host, and with me today is Patricia Baronowski-Schneider, President and CEO of Pristine Advisors. Patricia is a self-made C-level executive and entrepreneur. Her firm, Pristine Advisors, is built upon personal relationships, helping clients with investor relations, public relations, marketing, media relations, and raising capital. Patricia works with hedge funds, business development companies, master limited partners, exchange-traded funds, and closed-end funds, as well as corporations and individuals to decrease discounts, ward off activist shareholders, increase share price, and build relationships with current and potential investors. Be featured in top-tier financial publications, appear on financial television, radio, and online broadcast programs. Patricia is an expert in helping position clients within the media world. Welcome, Patricia. Thank you so much for taking the time. Let's start at the beginning. Tell the audience about your path you've taken in regards to your amazing career.
Well, thank you for having me. Well, the past was a little tricky one. I started my career basically right out of high school. It was a job that I had right out of high school. I started as an administrative assistant. One thing I found really unique was that I worked with about 7 or 8 different people, and I found the company really exciting. It was not like a typical receptionist where you have the same job every day. You never knew what the job was going to be for that day until you opened up your emails. So it was a lot of work because I was one person working for about 8 different people, but I found it really exciting. I was also a single mom of 2 small babies. So I definitely needed a job that paid well and had good medical. So that job suited me. Mm-hmm. So I stayed there and worked my way up the corporate ladder. I put myself through college, earned my master's degree, but still was going to school now on top of being a single mom and working 16, 18-hour days. So it was a lot of work, but I really, really enjoyed it. And yeah, I mean, I basically started with investor relations, public relations. It was a big global company. They also did marketing and media relations. So it was a lot of work. But yeah, it definitely kept me on my toes. I learned so much through the various different people I worked for, the clients that we had across the globe. So yeah, it was really exciting. And that was kind of where I got my feet wet in the marketing world.
That's exciting because one of the things I look for trying to communicate to our guests and our listeners is that we have an opportunity for our youth to bring them into our organizations, internships, summer jobs, and to be able to share the moving pieces and the vibrantness that's in our companies at this point. And I hope that's a message that, our listeners will take into their own companies, that they can mentor our young people to thrive, because you could see right out of college, you found a career that's been an amazing career, and I'm glad we're going to share it with our listeners. So tell us about Pristine Advisors and how you're different from other firms.
Well, I guess one thing that makes me a little different was we do IR, investor relations, PR, public relations, media relations, and marketing. People think that we sound like we're all over the place, but we found a need for it. The company that I was working for had various different departments. You might have had your technology department, your Europe department, your IT department, but we all pretty much worked together. So I had a taste for every aspect of the business. And even when I worked for that one company, I was there for 16 years and they were closing their department. So I had to go look for another job. And I was actually surprised when I would go to a company that says, okay, we do IR, investor relations. So I'd apply for the job, but all they did was annual reports. And I was like, wow, we do so much more than that. And another company said, we do PR, public relations, but all they did was advertising. So we do a lot, but we always feel that it's needed. We do IR, PR, marketing, media relations. We always found that if there's a void that has to be filled, we'll fill it. Like, for example, we also host conferences. Not that we want to be conference organizers because we have nothing else better to do. We found that when we had clients that wanted to present to the investment community, we would go to various different conferences, and it was kind of tricky. Either they were paying for assets under management, paying a large amount of money to present, but yet maybe the audience was a mix of people from totally different backgrounds and different interests. So now you're paying this money, you're presenting to them, but they really have no interest in your company at all. Or they have, X amount of speaking opportunities, and you might be giving a good slot or what you think is a good slot, but this huge company is also speaking in another room at the same exact time. So we started, we had clients repeatedly presenting at these events and got no ROI for it. So we started hosting conferences. We always found, like, what else can we do to help clients? It was never about us wanting to take on more work. It was pretty much just, what else can we do to help people? So I think that's one thing that helps us, keeps us separate from other companies.
That's a breath of fresh air. If you think about it, an organization will grow and thrive when it finds that the clients are asking, they trust you emphatically at this point, you understand their business, and then they're asking you to help them with other areas within the company, and you're actually growing along with them, and you're helping them move in a positive direction. But you also have cohesiveness, meaning you understand the business, right, and that allows you to speak in a single type of, the brand will stay at forefront at that point on the messaging, versus diverse companies coming in and trying to manage different aspects of it, and everybody's on the same page. You have a unique view of market share. Tell us why you're not more interested in market share.
Well, I guess it's not that we're not interested in market share. It's just a little different. Nowadays, the world has changed, obviously, with COVID. Everybody's online now. Everybody's pitching something different. And it's one thing that amazed me is how many life coaches are out there. I get pitched repeatedly all day long from everybody under the sun. I think the International Coaching Federation said that the industry has gone up about 33% at this time, and they predict about an 8% increase by 2029. So yeah, I can certainly tell people, everything that I've gone through, but it doesn't make me a life coach. Does it mean that people should drop thousands and thousands of dollars on these courses? People are actually doing it. So from my marketing experience, I'm competing with these self-help coaches and marketing dollars in my own business. I'm trying to pitch people what we do, and they're pitching what they do. And it's kind of hard. I've learned so much since COVID. We pitched another firm, and I have to give them credit. Their pitch was unique. They said something, for example, why pay another company thousands of dollars on a month for media when they can't guarantee you media coverage? So I was interested, and I'm like, okay, because it's easy for me to market clients, but I don't always have time to market myself. So I wanted to hear what they had to say. And what they were pitching was they had like an expert writer on two online publications that I've never even heard of. So their attitude was, why pay somebody else money? We can guarantee you coverage on these two publications every single month. And I'm like, okay, but I've never even heard of that. So if you pitch that to somebody, what's to say their customers or their investors would ever read that either? Like, that's where the marketing comes into play. Yeah, you can do that. You can totally do that. But then you have to market the heck out of it to make sure the right people see that. So, I always say it's not about getting it all fast and, getting it done fast and go away. It's about building a client's reputation, forming a relationship, with the investment community. Nothing happens 1, 2, 3. But if you build these relationships, those are the people that you want in your corner, and they're going to be there for you.
Very positive. We often learn more about the deals that don't work than those that do. Have you learned any big lessons from the clients regarding investments that didn't quite work out as well as they had been expected?
Yeah. Say, for example, the conferences that I mentioned, we weren't making any money on that. We just felt it was a need that people needed that. So what we did is, say, for example, we had a networking sit-down luncheon, a networking cocktail reception, whatever. That, let's just say, for example, to host this entire venue was $50,000, and we had 10 presenters. So then those 10 presenters would be considered sponsors. We would have investors, analysts, brokers, media attend. Those sponsors would also pay for the venue. So it was $5,000 a piece. But then it got to a point where people were saying, okay, well, why should we pay? We could just show up because the audience we want to meet is there anyway. We'll just network with the investors, analysts, brokers, media there. It was like, okay, so now we started doing it as a loss. And I'm like, well, it kind of just got to the point, we weren't doing this for me, we're doing it for you. So, that was just one lesson that we learned. Also, through our years, we have over 800,000 connections in our database. These aren't purchased databases. These are people that we've met through networking, conferences, events, webinars, whatnot. We've had people take us on, but then they wanted access to all of our clients. All of our database. But if we give you that, then why hire us? That's our database. So we've learned a lot. A lot of things like that happen along the way, but it's just the nature of the business, I guess.
Well, I'm proud of you. No one said it was easy, but
No.
you've had success, and I think you're really very passionate at helping the clients, and that's really the most important part. Can you talk a little bit about the unique dynamics and relationships needed to successfully raise capital in today's changing financial market?
Yeah, we believe that people have to build trust before they ask for money. Many investors in the early stage companies, they're not only evaluating the business decision, they're also assessing the personal characteristics as well. At this end of the day, they want to know if they can trust you, and rightfully so. It's not as simple as just going to anybody you don't know. We have lots of people that, I myself know lots of people, venture capitalists, hedge funds, whatnot. I can't go to them with every single person that's looking to raise money. It doesn't work that way. And then you have to know them. Who are they? What are they investing in? Who's your competitor? You want to make sure you're pitching to the right people. If I just go to some group online, like say, for example, LinkedIn, and I start pitching a technology venture to real estate capital, they're going to turn me off and block me because they're going to say, I don't know what I'm doing. So, we just say it's relationship fundraising as opposed to transactional fundraising. It may be time consuming, but it's the key to get the funding and building a set of core advisors and investors who'll back you for the long run. There's no doubt that relationship fundraising can be an intimidating process, but it's a valuable way to get in meetings and to build authentic relationships with the people.
Trust is the key, and doing your homework. When you use a professional like yourself, Patricia, it makes it easier for defining who is our best target or prospect to help us with the raise at this point. There's a lot of money out there that needs to get put to work, but that needs to get put together intelligently with a proper risk profile. So what is your working process with your clients to help them identify investment opportunities or to build the next fund and to promote them to obtain the needed funding?
Well, we always say to do a peer analysis and to see what their strengths, weaknesses, opportunities, and threats are ahead of them. We want to have answers to questions that potential investors may ask to ensure that they're at an advantage to their peers and why. And this will also help us promote them to the investors better. And we're always researching various investors and groups and events for various funding resources to keep on top of who's investing in what to ensure that we target the right people. If we pitch a real estate venture to a commodities investor, chances are they'll see us as inexperienced and block us. So we want to ensure that we know what we're doing and do it right. Once we narrow down the target investors, we either arrange a meeting with the client, pre-COVID obviously, or now Zoom, a visual chat, or a conference call, et cetera, to introduce the pair and let them tell their story and what they have to invest in. And sometimes it could be as big as flying investors down to see a plantation or whatever is needed to ensure the investors have all that they need to make their decision. We handle it all to ensure that the clients have the best advantage to obtain the funding and investments that they need.
So you have a turnkey solution for those that are smart and will work with you and your team to be able to have a good outcome at that point.
Yeah, we had a client one time in Hong Kong where we did that. We had a group of probably about 15 investors that we flew all the way to Hong Kong to visit their whole entire venue just to make sure that was something that we weren't lying. It was in Hong Kong, but they wanted to see it themselves and really make a decision. And they wound up getting a lot of investors that way.
Very, very positive. One of your recent journal posts was titled, "How to Ensure Your Investor Relations Data is Safe." Can you share with us the biggest concerns that people should be aware of?
Yeah, because of the financial nature of information, it's crucial to be aware of and to be prepared for any breaches in security of this information. Protecting the data from cyber criminals is major and more challenging these days. As technology advances, so does sophistication of these hackers. I've seen it firsthand myself, and it's truly sickening. Today, long-term investors want deals and presentations that show just how companies are collecting and analyzing the data to inform them of strategies and modernization business models. They also want examples of new products and services, as well as information and benchmarks that help them to track and measure performance, and benchmarks that help them track and measure performances and progress. Yet they also want to know that management teams and corporate boards are continuously evaluating cyber threats and making necessary investments in security programs, as well as updating plans to address the near inevitability of the breach. Technology and caution are a never-ending process to ensure companies are secure. These concerns keep us IR and PR people on our toes. We're constantly keeping aware of who the experts are and what systems they have and what resources are useful to us and our clients. If there is a breach, we need to know the steps that are needed to respond immediately. We need to know what shareholders need to be informed and in what sequence. We have to ensure that our clients have communication plans already drafted for potential scenarios. Data breaches can obviously lead to PR troubles, long and strenuous distractions, legal issues, and customer attrition. Investors want to be confident that cybersecurity is a top priority, and rightfully so. IR teams need to be on the front lines of these communications, ensuring that they're comprehensive, informed, and updated. Basically, you want to have a plan in place before the problem happens.
Well, I think that's brilliant. There's no question to it. Being reactive to a cyber breach is going to be very, very challenging. Actually, we're recording this in June of 2021, and we've seen a couple of breaches and a couple of folks, pipelines, meatpacking facilities, and it's very, very challenging. And at this point, it's not going away. The White House is involved at this point on cybersecurity. It's front of mind. They're wondering if there's some rogue actors at this point in some countries at this point, but they may just be folks living in those countries at this point that are creating havoc. So,
right.
In recent times, retail investors have become a significant force that must be considered while strategizing in investor relations and public relations policy. What are some of the factors that we need to consider in that space, and how is the environmental, social, and corporate governance, referred as ESG, impacting the investment community and business?
Absolutely. We've always been a big advocate for the retail investors. We speak to them daily and understand their concerns. In the past, many firms focus on the institutional investors because of their large investments, but your retail shareholders are customarily your long-term holders and deserve equal appreciation. So we pretty much guide our clients to cater to both of them. Today's investment landscape is more complex. There's a shift to passive investing, greater emphasis on ESG issues, and a greater commitment to all shareholders, not just investors, intensified by a recent statement in the Business Roundtable, which read, while each of our individual companies serve its own corporate purpose, we share a fundamental commitment to our stakeholders, and this was signed by 181 CEOs. We commit to deliver value to all of them for the future success of our companies, our communities, and our country. That was obligation to champion obligations to customers, employees, suppliers, and communities. We're also in the middle of a major transfer of investor impact from referring baby boomers to emerging millennials. The millennials are now coming of age, growing in their careers, and increasing investing. In the US, federal data shows that the median household income for millennials tops $85,000, more than any other generation in the last 50 years. So, we pretty much, we cater to investors on all avenues, the institutional, the retail, and everybody in the investment community. Now they require much more marketing materials. They're demanding disclosure that provides a more in-depth view on outlooks, complete with measurable performance target expectations. Investors expect to see this in presentations and investor decks, along with ESG goals and accomplishments, including details about how this work positively affects customers, employees, and society, this work positively affects customers, employees, and society broadly. Investors expect a very detailed discussion about long-term opportunities as well as risks. They want to know things such as, how can a company capitalize on broader economic and common trends to create and execute a feasible long-term plan? And at the same time, they want to know things such as, what are the most notable threats and where is the company most vulnerable? What steps is management taken to reduce the risk of this? And what's a clear view of profitability and shareholder returns? And also with the focus on customers for all stakeholders. So they have a lot of questions, but rightfully so, and they deserve to have answers. So we are the middleman between the investment community and the client. So we're constantly, trying to make sure that all the questions are answered before it becomes an issue.
It's definitely going to come up in those conversations with the shareholders, especially the major shareholders at this point. We have active shareholders at this point. We just Exxon just put 3 people on the board at this point that were nominated outside the company. At this point, they're benchmarking Shell versus Exxon, and Shell's been moving into clean tech, where Exxon has been a little lax, let's suggest. Yes, they're doing some biofuels, but again, they're not moving in a direction that probably on a global level, legislation is going to change what the mix of fuels that we're going to be able to be using at this point. So it's going to change the business. They're concerned.
Yeah. Well, years ago, we had, a lot of activists coming after our clients. And what happened is we actually had some big clients, some big shareholders. At that point, when an activist knocks on the door, now the clients want to reach out to the shareholders. So one big, very well-known shareholder had said, I've been trying to contact this portfolio manager for years. Now you want to talk to me? I don't have anything to say to you. So we decided, okay, we actually did a webinar one time. Webinar on activist investors. And it was basically giving them the floor to say, okay, what puts a client on your radar? And they had the floor, they spoke. That webinar was hugely attended because it gave people an opportunity to say, okay, this is what puts me on their radar. This is what I have to do to not be on their radar. So we did that. And then we started an outreach. Every quarter, we'd have our clients reach out to shareholders. Sometimes they wanted a one-on-one call. Sometimes they didn't need it, but they appreciated being asked, because they feel, okay, we invest a lot of money. At least they value me enough. You're not giving information that's not already public. You're just giving them an update on, here's what we're doing with the company. Here's what we expect. Whatever. But they do appreciate being asked. And that goes a long way.
It's a breath of fresh air. Yes.
Yeah.
People are listening at this point. And companies they have stakeholders. The shareholders are important, but we've got our employees, we've got communities, we have our facilities in at this point. We have legislative government agencies that we work with. Those are all stakeholders at this point. So, yes, it is more sophisticated, more complicated, but people like yourself can come in and actually help them create a plan that they can execute and feel confident that they're in a position where it's well thought through.
Right.
And it's concise. There's fluidity to it, and it builds confidence. The C-level executives, our CEOs, they have a lot of responsibilities at this point.
Yeah, they want to have the trust. I remember we had one portfolio manager who was always talking to investors, and he was as honest as could be. He said, I remember one time he invested in something, it didn't work out the way they wanted. He reshuffled the portfolio. They wound up doing really well. And he just told them point blank, I took a chance. I thought this would work. It didn't work, but I moved it. And look, we're in a better position now, blah, blah, blah. But we had another portfolio manager once upon a time who was heavily invested in the financials when the financials were tanking. And I don't know if this manager just set it and forget it and didn't do anything. Now we're an outsider, so we can't tell them what to do, but we can only offer our opinion. So we started showing them what their competitors were doing. They were reshuffling the portfolio. And as an outsider, we were told it's not our job to tell the portfolio manager how to run their job. So we couldn't do anything. We just kept showing them, okay, this is the stock prices of your competitors and yours is going down, down, down. And we have the 800 number for the investors would call on my desk. It was ringing off the hook where people were saying, okay, is the portfolio manager paying attention? What's going on? And they just didn't acknowledge it at all. And that company wound up being taken over. They're not in existence anymore. Not to say that we could have prevented that, but give us an opportunity to express our guidance. We can only offer our opinion and show you what everybody else is doing. And you can explain why you're doing what you're doing. And maybe people would accept that. But to just ignore everybody is not the way to go. You have to have that trust.
So you have a nice relationship with the clients, if you think about it. You're an early warning, you're predictive analytics. You're benchmarking against the industry at this point in time, and you really got an eye on an ecosystem in essence in the area that these clients are operating in at this point. So that's important. You got a team player, let's say, helping them look out for them, but also looking down 3, 5, 10 years out. Also, what is the landscape going to look like? And the brilliant clients listen.
Right, exactly.
And at that point, they get a lot of value for what you bring forth. So what do you include in the way of advice and education to accredited investors and the general public when it comes to investing in a particular sector? And what do you tell them to do before they invest?
Well, with people investing, you can make money in all types of markets. When the markets are up, when the markets are down, you can definitely make money. But the whole thing actually boils down to keeping everybody informed. Like I said, a portfolio manager who you only hear once a month having their monthly fact sheet, and sometimes they'll give a manager's commentary, which is just boilerplate bullet points.
Mhm.
That's not enough. I mean, you should do minimum a semi-annual webinar. It would be nice if you did a quarterly one, a 2-paragraph vlog, or you blog and then have a vlog so people can see you. A lot of times we had clients international, and traveling here isn't always feasible, but letting people see your face, that goes a long way. They can trust you that way, because reading something, for all they knew, your secretary wrote that. They don't, they want to see you and know that what you're doing. On 10 minutes, once a month or once a quarter isn't a lot to ask of somebody. Yeah. From the investor side, I always say invest with a portfolio manager that you can trust. It obviously varies on whether I'm speaking to an institutional investor or retail. If it's a new investment, they have to do a little research about the company. Is their website providing enough of the details? If it's not, if either the company or the IR team is probably not paying much attention. And as such, this is a major red flag for investors. If investors are able to seek information on the investments on a company's website, yet it hasn't been updated or just doesn't provide adequate information or isn't complete or hard to find, then it's a short sign that providing you with the information you need is not their top priority. Because if it was, it'd be readily accessible to them on the website. This is why me and my firm routinely do website audits for our clients to ensure the information is readily available and easy to find for our clients, customers, or shareholders. We even do perception studies with the shareholders to find out what type of information they look for on the site, how easy it was to find on the site, what problems they were having, so we can ensure the clients meet the needs. Also, how does the historical data charts look? Does it appear that the PM is on top of the investments and the stock price is moving in sync? We don't expect the investors to do all the work, but these are things that they have to kind of look at to see in terms of an investment. The institutional investors, obviously, they have a lot more programs in place to analyze. But again, they want to know it's a portfolio manager that they trust. Is it a company that, is well known? If the company has issues, that's where their marketing team should come into play, because you can always tell a story, explain, a lot of times bad things happen, but explain why and what you're doing to help the situation. But just ignoring things doesn't make it go away. So that's kind of my advice for shareholders.
So visibility, admit you may have a challenge, and the corrective actions, share it all, be visible to our shareholders at this point in time.
Right.
Is a breath, allows people to really have the confidence, which maintains trust. And that's the key.
Right.
Thank you. Do you have any advice for people that are running startups that want to become entrepreneurs regarding raising funding? How do you build trust, de-risking, ensuring investors feel that your plan is sound, transparent, ensuring you have the conviction to see the project through?
Yeah, I mean, for us, we say it's all about relationships, connections, trust, et cetera. That trust is on both sides. For starters, I'd suggest that they protect their business's idea with a patent or copyright or something, or someone that they can see their pitch on a crowdfunding site or VC and steal that concept. Unfortunately, this is a cruel world that we live in, and you want to cover your base. That being said, there's various ways to starting out. They can consider launching a crowdfunding campaign. Crowdfunding helps businesses raise capital and grow their business when they otherwise might not have access to that money. They can also seek an angel investor. When trying to find an angel investor, the best place to start is in their industry. They should look for conferences related to their field and visit online angel networks like AngelList. They can also find other like-minded entrepreneurs, lawyers, accountants, venture capitalists, or investment bankers that might want to invest. LinkedIn, for example, has tons of groups that they might want to join and pitch their idea. Now, there are other venues such as Clubhouse or Lunch Club, et cetera. These options are endless in terms of networking ideas. They can also consider getting an investment from a venture capitalist. They could create a target list of VCs that are a good fit for the company, then look for VCs that invest in companies like theirs, then ensure that the firm invests in the stage of funding that they seek. They should also check out the firm's past deals and see how they've done. So depending on who they are, what their business is, their level of comfort, there's always raising capital by asking friends and family, as well as applying for a loan. So it really depends, what their comfort level is, what their experience is, what their connections are. But yeah, there's lots of different opportunities for them.
Well, you shared a lot right there. It was very, very positive. So we're finding the friends and family usually is the start at that point in time.
Yeah.
The ability at that point to drive revenue will allow some of the private equity. Now, I'm an angel investor, and I'm in 27 companies at this point, so you get an idea of a portfolio. But we're starting to think about companies with $1 million worth of ARR and reoccurring revenue to try to, can't be everything to everybody at this point. And we have a lot of respect for the private equity, limited partners, family offices, and VCs. They have certain areas they want to operate in. It's a privilege that they have that domain knowledge in that vertical, and they want to stay comfortably in that. And Patricia, you shared something that was very, very important, that you need to do the research or hire somebody like yourself to look at helping you define those investors that actually are in your space to go out and start that conversation. And then the collateral material that needs to go with it to provide the confidence that, you're going to be successful with the venture. What do you consider to be the greatest challenge in the post-COVID era for the investment community?
Well, I think UBS's CEO said it best. He said 2020 featured unprecedented shutdowns of economic activity, a fusion of monetary and fiscal policymaking, and a vote for new leadership in the US. 2021 will see us start to shift back to pre-pandemic norms while simultaneously accelerating forward into the post-pandemic future. Now, from where we stand in the post-COVID-19 landscape, we can see that the new consumer trends will emerge. These will include a shift toward online shopping and working. A new focus of sustainability will be key investment trends in the future. Also, alternative data will become an important tool for analyzing future investment trends. And there's probably no going back, even when most businesses reopen. New systems, new habits, new patterns have emerged, changing our day-to-day lives forever. And this is likely to keep the information technology sector booming. We also believe that ESG investing will be big in in the post-COVID-19 era. COVID-19 has been a wake-up call for a lot of businesses, which has shown us how our markets and supply chains are easily disrupted and fragile. Maybe in an increased focus on sustainability, investors will start to focus on ESG performance and climate risk data to gauge their decisions about future investment trends. Some examples of growing adoption of ESG can be found everywhere. For example, IFC has become the first issue to formally integrate ESG consideration for its underwriter selection process. So COVID-19 has magnified unfairness and made evident the importance of companies to expand their strategy and risk management process to now include key stakeholders that go beyond shareholders. Businesses and policymakers are now committed to building back better and aiming a green recovery. One possible good outcome that comes out of COVID-19 nightmare would be a shift to a more resilient, inclusive, circular, and sustainable economy.
Well, that was well said.
Thank you.
Very comprehensive. I appreciate that. What are the greatest rewards for you personally in what you do and what you consider to be your legacy?
For me, business-wise was basically the start of my business and how clients appreciated me and valued me enough to follow me through 3 firms and with me on my own firm. So that's a great reward. Personally, I have 2 wonderful grown children and 3 beautiful grandchildren. I would want my legacy to be about impacting people's lives for the better. This is to anyone I've encountered, both friends and business people. I want them to remember me as someone who's helped them, given them company or a shoulder to lean on. I'm a good and empathetic listener when a rant or event was needed to be expressed. And an insightful person, one who gives a different perspective and now able to see things in a broader view. I've gone through so much in my life and I've always made time for people. And I hope they remember me with my warm heart and smile, as I never substitute that despite my own heartache and drama.
Patricia, can I share your contact information with our listeners?
Absolutely.
Thank you for that. Patricia's email is pbaronowski@pristineadvisors.com, and I'll spell it for you. It's PBARONOWSKI at Pristine, which is PRISTINE, advisors, ADVISERS.com. The website is www.pristineadvisors.com. I want to thank you to our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination LLC.